Ladies and gentlemen, welcome back to the channel. Here in this video, we're going to speak about another big catalyst this week that could have a very positive effect on AMC stock. Coming at the same time, AMC is going to be reporting earnings. That is on Wednesday. Now, we're also going to get into the short interest data over on Ortex. But we're also going to look at some charts on our broader markets and why stocks might actually rally quite a bit higher from here, at least in the near term. Now, we will go over my expectations towards the end of this year as well as for 2024. Should you be going all in this market? Am I going all in this market? What should you be doing right now? And I say that sounding like a financial advisor, but I am definitely not one. I could be wrong. This is not guaranteed you're going to make money. I don't have a crystal ball. Come to your own conclusions. Do your own research. These are my opinions regardless of what I say. Do not invest your money based on what I say, even if it sounds like it's a guarantee. I know I can be slick with the words sometimes. That's why I got 2 kids, okay? But no, don't listen to me. Okay, let's go ahead and get into all of this information. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comments section. So first things first, I want to start with what could affect our markets this week besides AMC. Now, AMC, if you guys if you have not seen the last video, AMC reports earnings on Wednesday. Now, if AMC has good earnings, well, that's going to trump over what we're saying here. I guess no pun intended with Donnie Trump, but that's going to trump over what we're going to say next. But the two working together could be even better news for AMC. And I think that's probably what we're going to see happen. Now, we have Fed Chair Powell that speaks at 10:15 a.m. on Wednesday. You have a lot of other Fed speakers as well throughout the week, Monday, Tuesday, Wednesday, Thursday, Friday, every single day. You have like multiple Fed speakers. Now, we haven't heard that many Fed speakers so far since the last FOMC press conference, but we did hear Fed Bostic on Friday. He said, quote, Fed Bostic sees inflation falling back down to 2% target in the second half of next year. Fun fact, the average Fed member doesn't expect PCE on the core or the headline to hit 2% until 2026. So Fed Bostic made some very strong statements on Friday. Now, Fed Bostic also said, let's see, where is it? He says, quote, we cannot wait until we are at exactly 2% to start reducing rates. It has got to be before that. Headline PCEs at 3.4%, buddy. I mean, you're getting pretty close to breaking into the 2s when Fed funds rates are 5.5%. I mean, one would argue that means we're probably getting closer than not to the first rate cut. So Bostic sounded very, very dovish on Friday. And that's probably another reason why the Russell 2000 was up around 3%. So the Fed is either going to confirm this rally or reject this rally. One wrong comment from Powell could send bond yields soaring again and could send stocks back downwards. Now, a stock like AMC, a stock like any of them that are in the Russell 2000, usually they don't move higher unless there is liquidity in the markets. There is really a chronic lack of liquidity in our markets. Nobody's buying stock. That's why the Russell 2000 has been trending down for like years now. It has really, it hasn't done literally anything. You were trading at your pre-pandemic highs, even though the money supply went from $4 trillion to $20 trillion, now at $18.5 trillion in that same time span. You have increased the money supply by still like 350, 400%. The Russell 2000 has not benefited because that money is just not buying your Russell 2000 stocks. When the Fed is raising rates 5.5%, AMC is, I believe, still one of the largest components of the Russell 2000, if not potentially even the largest still. I haven't heard anything on that. I might have to double check on that. But AMC is still a very large component of the Russell 2000. So if you get liquidity heading into our markets, that's going to be a great a great thing for AMC, and then that could really help AMC stock rally from here. Now, what you see in the last 2 days of our market was a rally of about 5.25% for IWM. This tracks the Russell 2000. If the Fed confirms this rally and the markets take that as lower rates to come, the Russell 2000 could go much higher from here. You were just trading, around your October 2022 lows. Like, there has been no participation with the Russell 2000 as of, all of 2023. Now, again, with that being said, if Fed Jerome Powell wants to end this rally, he wants to see 10-year Treasury yields go higher again, he can do that by literally making one statement. It does not take all too much for the markets to backtrack on some of the recent bullishness that we have seen. So that's going to be a big catalyst on Wednesday. You're also going to have Fed Jerome Powell speaking on Thursday, but I would imagine, and that's Thursday at 2 p.m., I would imagine if we get new information, it's probably going to come on Wednesday. I would go out on a limb and say that's probably when we're going to get new information from Fed Jerome Powell, if we're going to at all. Now, again, there's a lot of other Fed speakers as well, so take that into consideration, but Fed Jerome Powell is by far the most important person at the Fed, and that's really going to, dictate how things trade. Now, if you guys are viewers of the channel, you have probably seen this as well. 2 Fridays ago, we entered into a technical correction. That means last week was the first week that we were up in that technical correction, right? 1 week later, you tend to bounce about 1.5%. You're positive 66.7% of the time. So that's exactly what happened. You ended up bouncing quite a dang bit. 2 weeks later, 3 weeks later, 1 month later, you tend to be down about 2%, and you're positive 40% of the time. So you're in the red about 60% of the time. So the stats basically flip. From 1 week later to 2 weeks, 3 weeks, and 1 month later. 3 months later, you tend to be about flat, positive 53.5% of the time. 6 months later, you're usually positive about 3%, 66.7% of the time. And 1 year later, you tend to be positive about 10.1%. 80% of the time. So we'll see. Historical precedents would say you're probably going to be down the next couple of weeks, if not just trading sideways, but that is not a guarantee. Now, FX Evolution did share us this chart on X. He says a new higher high is formed on the bullish percent index. Similar moves like this have generally been favorable for the recent lows to be the bottom, and you can see this in October of 2022 pretty notably. You kind of hit the bottom, you do set a lower low, then you start to set a higher high, as you've seen back here in early October, and that's just what we've seen just now. So that's usually a good sign that you're probably headed back higher, and this is basically just showing you the bullish percent index. So how many stocks out of the index are actually starting to be pretty dang bullish, and it looks like things are going pretty well. Now, I've also shown you guys this chart also. You're at about 500 days since the Russell 2000 has hit a new 52-week high. This is on par with the internet bubble as well as the global financial crisis. So we have been begging for a bounce in the Russell 2000 for a long time. The Russell 2000 has not been doing much of anything, literally has been doing nothing. So I think this bounce could be like the real deal. I don't think the Russell 2000, I don't think your small cap companies are going back to the lows in which they were trading at over the past 2 years or so. I think you probably bounce from here. Tactically, it's hard to be bearish right now. I don't have any shorts on the markets. You couldn't pay me to be short. With rates coming down the way they are, I want to be bullish on our markets. I'm not exactly going out and buying calls, but I'm not selling anything either. I want to be in the markets right now until the end of this year, heading into the beginning of 2024. If recession does come up and more fears come about of a recession, then that's when the markets could fall. I'm not going to sell any stock then when a recession comes either, but that fear of a recession could push the markets down and potentially even retest those October lows. But I think the money is not going to fully leave the Russell 2000 the same way it did prior when the Fed was raising rates. That's because lower rates are going to help your Russell 2000. And the Russell 2000 is trading at historically very low valuations. I mean, the Russell 2000 is trading at like forward PEs of like 11 and 12. It's just ridiculous, actually. And you haven't been this low on a valuation for the Russell 2000 since 08, 09, the global financial crisis, as well as the bottom of the Rona crash in 2020, when literally most people thought, like 10% of the businesses everywhere were going to go bankrupt, especially your Russell 2000. They were doomed in the eyes of the markets, and you're trading at those valuations yet again. Now, tax loss harvesting. This is another pretty interesting thing as well. Private clients, like retail investors, tend to do a lot of tax loss harvesting in November and December. It's December 5th right now, so November 6th is going to be tomorrow. You do tend to see quite a bit of tax loss harvesting in November. December tends to be the big month, but what's actually interesting is institutional clients tax loss harvest the most in October. So a lot of the institutional selling is probably over, and I think a lot of retail investors are probably not willing to sell a lot of their stocks at very depressed levels. So we'll see what ultimately comes about that. But it will make the next, couple of days and weeks pretty interesting. Now, like we said in the last video, option activity was pretty dang bullish on Friday, 73% positive. 21 orders totaling $2.25 million. Over the past week, you had 45 orders totaling $4.29 million with a positive order value of 68%. And the put to call ratio is insane. It's at 0.66%. You have fallen off of a cliff. This is another reason I've been calling for a rally for a while in AMC. We've gotten a rally from $7.05 at that low to where you are now at almost $11. But in the grand scope of things, AMC stock is sitting at the same levels you were back in January of 2021, when a lot of people thought AMC was literally going bankrupt. Like literally going bankrupt. So I think you can see a very big rally coming on AMC's earnings, and really just as liquidity potentially heads back into our markets, that could really help AMC as well. If you take a look at the M1 money supply, like I said, money supply went from about $4 trillion in February of 2020 to a high of $20.6 trillion. Now you're sitting at 18 or so trillion dollars. If you look at money market funds, we'll go ahead and pull this up as well. There's a lot of money in money market funds, and this is basically buying short duration, high quality debt like government treasuries. That's basically what money market funds are. You can park your money, get 5%. It's very liquid. You want to get out, you can. Take a look at money market funds. You're sitting at almost $6 trillion of assets held in money market funds. Normally, once you hit these peaks, you tend to fall quite a bit. You could see, 25, 35, 40% of money leave money market funds and head back into stocks. And that's going to be another booster to liquidity, not to mention, again, when the Fed does actually start to cut rates. So I think the markets now are looking ahead to 2024, and they're saying, hey, who's going to benefit from rates coming down? A company like AMC is going to benefit from rates coming down in theory, as long as we don't see a lot of dilution, or as long as we don't see the business take a sharp downturn. AMC stock is in a prime position to benefit from that. Like we said, the put to call ratio, some of these other things that are very bullish, I think is just a leading indicator of what we're going to see over the next couple of months. Now, take these numbers with a big grain of salt. You have a short interest percentage of free float of 6.38%, $132.32 million worth of short positions. Days to cover 0.61, 12.61 million shares that are currently sold short. Shares out on loan 14.74 million shares. Cost to borrow 1.28%, utilization of 32.48%, and a short score of 50.45 out of 100. I don't think these numbers are correct at all. But if you take a look at the cost of borrow fees, cost of borrow max about 6%. I don't think that is correct either. Cost of borrow fees are probably going to ramp up as we get closer to Wednesday and as we do head into AMC earnings. Same thing with the options. That is going to be very interesting to see. I might make a trade on it. I might not. I'm not so sure. If you guys want to come get notified if I do make a trade, if you guys want to join the trading community, link down below in the description of this video. Nonetheless, that's probably going to do it. We did cover a lot in a very short amount of time. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.